Hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Tuesday morning and the cues aren't looking all that great given the fact that the GIFT Nifty is hinting at a quiet but negative start. Even in the pre-open, we are seeing a cut of somewhere around 80 points or 100 points on the Nifty. In fact, at least the pre-open is hinting at another 0.5% cut on the Nifty. But once the rates settle, we'll really understand which way we will head. But for now, it is looking like we are looking at a negative start. Lots of stocks in focus. Akzo Nobel is one, and you have ONGC and some of the PSU banking names will also be in focus. We'll try and understand what to do with some of these stocks, and of course, we'll also be getting you views on what queries you have. So keep them coming in on our live feed on YouTube. We'll try and get them addressed as well. But before we move any further, let's quickly take a look at the top headlines at this hour. For the third straight session, while the Nasdaq slips into the negative territory for the year. Looking at the Asian markets, they also opened lower on a weak handover from Wall Street and uncertainty over US President Trump's tariff war. The GIFT Nifty is also suggesting a lower start for the Indian market. Gold continues to shine. The yellow metal hits yet another record high as safe haven buying continues on concerns over Trump's tariff plans and a weaker dollar. Crude prices tick higher with Brent above $74 a barrel mark. And the government has begun inviting bids to appoint lead managers, brokers and merchant banks for its divestment agenda. The bids are being invited for stake sales in select public sector companies and financial institutions. All right, then looking at the cues for trade, the Nifty is at an 8.5-month low. We have breached that 22,600 level on the downside. It was the fifth straight session of declines on Dalal Street. That crucial support level of 22,600 has been broken. 22,516, that was the swing low yesterday. Whether we managed to defend that today or not, something to watch out for. But is 22,400, which happens to be the next crucial zone, is it going to be violated, or are we expected to stage a turnaround from here, given the fact that most experts believe that we may be in the oversold territory? We'll really touch base with our technical expert in just a few minutes and ask him this question. But, remember the Nifty, in fact, is set for its worst monthly losing streak in 28 years. 5-day losing streak. In fact, 5-month losing streak is something that we have seen only twice in history, and this happens to be the second time. So whether or not we manage to come out of this weakness and perhaps look at ending the month on a positive note, who knows, because it's already been a 4% cut for the market in February thus far. It's IT, metals, these were some of the pockets that were among the big laggards yesterday. In fact, the IT pack was down somewhere around 3%. Weak global cues, these have continued to keep the market under pressure. The mid-cap pain continues. The mid-cap index was down another 1% yesterday. It did try to stage some bit of recovery last week, but since Friday, all that recovery that it saw has already completely fizzled out. The market breadth continues to remain weak. Yesterday, the advance decline ratio was 1:3, but pharma and FMCG managed to buck the trend. In fact, FMCG managed to snap out of a 15-session losing streak. Whether it's just a flash in the pan or whether we see some recovery from here, that we'll watch out for. Nifty Bank Index although has outperformed Nifty over the last 1 month and 6 months as well. Yesterday it came under pressure, 300-point cut on the Nifty banking pack as well. But in terms of the options cues, the put call ratio dropped to 0.71 vis-a-vis 0.82 in the previous session. The couple of stocks in F&O ban, Manappuram Finance and Chambal Fertilizers, no new entrants, but these stocks continue to be in the F&O ban list. A fairly higher sell figure again from FII, 6,200 crore worth of stocks sold in the cash market. Remember, for the month of February alone, FIIs have sold to the tune of almost 43,000 crore rupees in the cash market. DIIs, buying support continues, 5,100 worth of stocks bought in the cash market. So all in all, the cues are looking fairly, subdued. We will have to see how low we go from here, because 22,400, that would be the next major support on the index according to some experts. We'll have to see whether we manage to defend that level or not. But on that note, let's see whether we have a technical expert joining in or not. Ruchit Jain, Vice President Technical Research, Motilal Oswal Financial Services. Ruchit, if you can hear me. The sell-off continues, no respite, 22,516, that was the swing low yesterday. Are we going to violate that, and 22,500 at risk for now?
Yeah, hi, very good morning, Nandita. Definitely, this is an important support, 22,500, considering that, Nifty has been trading in a falling wedge pattern and this is the lower end of the pattern. But what we have seen yesterday that there is no sector which is taking the leadership for now. Yesterday, some stability was seen in the banking space after that negative opening, but IT was, the sector where the 200 DMA got breached, and the heavyweights from the IT space witnessed correction. So, in absence of any fresh buying interest in any of the heavyweights which could lift the markets higher, I think such lackluster momentum could continue going ahead. 22,500 is one of the support that we are watching for. If that gets breached, then probably around 22,350 is the level that we can expect on the lower side. Whereas on the higher side, 22,700 needs to be taken out first, which is yesterday's gap area to preempt any kind of pullback move towards the 20-day exponential moving average. So 22,500, 22,700, this will be the trading range that one should watch out for. Today, for intraday, if any side is breached, then one can expect momentum in that direction.
Okay, that's the view then. But some PSU banks that have been focused today, government has approved a 2,000 crore rupee QIP plans for each of 5 public sector banks. Other than Bank of Maharashtra, you have 4 PSU banks that will be raising funds in small tranches from the 4th quarter onwards, and these are Punjab and Sindh Bank, IOB, UCO Bank. These are some of the banks that have gotten the nod for fundraise. Central Bank and Bank of Maharashtra also among them. Looking at some of these PSU banks, are they catching your fancy now? Overall, Nifty Bank Index has outperformed the Nifty, even over the last 1 month or so. Would these smaller PSU banks be on your radar? Your thoughts on some of these names, and SBI as well. That's the big one. So compared to the bigger ones, would you prefer smaller ones or vice versa?
Yeah, so Nandita, if you see the recent relative outperformance in the Nifty Bank Index as well is more because of the private sector banks rather than the PSU names. So within the private sector banks, we can clearly say stocks such as ICICI Bank, Kotak Bank, these are not showing any price-wise corrective phase now because they have already been through a long consolidation phase. But within the PSU banking space, also the smaller ones are not the ones who will take the leadership when the market turns. So in such kind of markets where every pullback move is getting sold into, I think better to wait for some leadership to come in from the large cap names such as State Bank of India. And if there is some confirmation of a broad-based rally within the PSU banking basket, then look for the mid and the smaller names. We have seen recently as well, these stocks showing 1 or 2 days of pullback move on some kind of positive news flows in between which come in. But the up move has not been, we have not seen any sustainable up move where the follow buying is missing. So, I'd wait for some leadership coming in from the large cap names such as SBI within the PSU basket. And in case if we see some reversals over there and there are some signs of a broad-based pullback move in the PSU banking, then one should go with the mid and the smaller names.
Got your point. And of course, private banks, they have been faring much better than PSU banks, which is why the Nifty Bank has also been outperforming. But one stock that I want to get in your thoughts on is NTPC Green. This stock fell below 100 rupees, fell 7% after the lock-in period ended. There's some bit of news flow as well. It has signed a memorandum of understanding with Madhya Pradesh power generating company for setting up of projects. But would you expect any kind of a pullback, or do you think supply, the supply or excess supply would keep the shares under pressure?
Firstly, there is very less historical data because the stock was recently listed in the month of November. But one observation is there that post listing, along with the market correction, the stock is consistently forming low top, low bottom structure. So I don't think 1 day's pullback would be great enough to take a call of any bottom getting formed in such kind of markets. Any kind of price volume action if turns positive or the stock surpasses that 108, 109, which is the 20-day EMA resistance for now. I think better to just keep a wait and watch approach in this.
Okay, keep a wait and watch approach. Of course, not too much data available. It's a recent listing. But another stock that will be in focus is Biocon. Its arm has launched, a biosimilar in the US, which is used to treat Crohn's disease, ulcerative colitis, and a lot of these skin related issues as well. But this was expected to be one major driver for the catalyst for the stock, according to some brokerages. But the stock has seen quite a bit of a correction. In the last 1 month, we've seen Biocon shed somewhere around 12% or thereabouts. Even last 5 sessions, if you see, it has been fairly on the weaker side. Now, at these 320 odd levels, would you expect any kind of a recovery? Would you say that the stock is already oversold? Is it on the cusp of a turnaround?
Not from current levels, Nandita, because if we look at last 8 or 9 months, no, we have not seen any kind of trended phase coming in Biocon. Although there were some other stocks such as Divi's Lab which have given very good returns in this phase. But 300 to 400, this has been broad 100 rupees range where since the stock is trading since last few months. I think if it comes near the lower end of the range around 300, then the risk reward ratio could become favorable there.
Sure. Okay, that's the view, Biocon. But let's look at the market then. First ticks coming in, and we have started the day on a positive note. It's kind of a relief, but it's just about marginally in the green. So the Nifty is just about 20 points higher, 22,575 or thereabouts. The Sensex, somewhere around 100 points higher. The Nifty Bank Index is has edged back above that 48,800 mark. Mid cap index as well moving in tandem with benchmarks, in fact slightly outperforming the headline indices. And looking at the breadth, for now it's even Stevens, 730 advances to 698 declines, so it's evenly distributed. Let's hope this trend continues as we progress through the day. But I want to just see what sector is taking the lead at the current juncture, since we are seeing some bit of green on the screen. Right now I can see the auto pack in the green. Yesterday autos clawed back from the day's low and ended the day in the green. Today building on those gains, 0.3% kind of a gain coming in on the auto pack. IT is extending its losses. It's a almost 0.3% kind of a loss coming in on the IT index. I want to see what the FMCG pack is doing really. Yesterday it snapped out of a 15-day downtrend. Hopefully it would sustain those gains because it was a long period of underperformance that was coming out of. So FMCG, no, it is slightly in the red, no big cuts, but it has once again slipped into the red. Aside of that, if you look at the PSU banking pack, 0.5% gains coming in there. Also want to see what the realty pack is doing. It's down 0.3%. So sectorally the picture is fairly mixed. Autos, banks doing well. So metal pack is also in the green. Pharma, this pocket is also trading higher as of now. In terms of the individual movers, then let's see which other stocks are taking the lead. Financial stocks, Shriram Finance up 2%. M&M building on the gains that it saw yesterday, it was the top Nifty gainer. ICICI Bank from the banking pack is doing well. Trent as well, 0.6% kind of gain coming in on a Trent. You have BPCL, this stock is also doing well. Remember, it will be exiting the Nifty pretty soon. And IndusInd Bank, Maruti, Bajaj Finserv, ONGC, these are some of the other names that are doing well. What's not doing well are the likes of L&T, SBI Life, Hindalco, Grasim, some of the pharma names like Sun Pharma among laggards, Cipla as well, under the weather. TCS, Tech Mahindra, all of these stocks, HCL Tech, these were big losers yesterday. And today as well, we are seeing these stocks extending the downtrend. Looking at the open, Ruchit, as we speak, the mid cap index has slipped into the red. But if you look at some recommendations in this market, what would you suggest?
So, no, for the index, I think it still seems that we would see some consolidation today as well. No signs of any trended phase is there, and as we said, 22,500 will be the important level that we will watch out for. Amongst the stock specific recommendations, in such markets, Kotak Bank is one stock which is looking positive. We have seen a good relative outperformance in the stock, and the 20 DMA is acting as a good support on any declines in the stock. Yesterday's low also, if you see, coincides with the 20-day exponential moving average. So keeping a stop loss below that 1930 mark one can go long on Kotak Bank, expecting target somewhere around 2050 to 2060.
Okay, Kotak Bank. I want to get in your thoughts on a Tata Group stock, Tata Investment, because Tata Capital Board has approved the IPO of equity shares of the company. The IPO will have a fresh issue of up to 23 crore, rupees OFS by certain existing and eligible shareholders of the company. It will issue shares worth up to 1500 crore rupees on a rights basis to existing shareholders. Tata Investment, I think that's the big gainer on the Nifty 500 right now. 6,115 is where it's at, 6% uptick. Do you see more upside?
So trading pullback can be expected, towards 6,400 to 6,500. I think, because of these news flows, only a few days ago also the stock witnessed a price up move which was supported by high volumes. So I think in such scenario, one can expect levels towards 6,400, 6,500. But no, it's a bit volatile stock, so we need to see a sustainable up move rather than just 1 days of up move to conclude that we could see a up move based on sustainable basis.
Okay, that's the view on a Tata Investment. But let's shift focus to some queries then. I want to take up a query on Zentech coming in from Shweta Naidu. She's bought shares at 1837 shares. She wants to know whether she should average or hold, and at what levels can she exit and reduce her losses. Her time horizon is 1 month. 1 year. I beg your pardon.
And if you could just repeat the stock name, I just missed that.
Zentech.
Okay, so mid-cap IT, no, yesterday itself we saw that the IT space had seen some sort of selling pressure, and Zentek has already been an underperformer since the start of this year, where the stock recently also breached its 200-day exponential moving average. So I think look to exit on any kind of pullback moves. The immediate resistance would be around 1300, 1350 kind of levels. So overall trend does not look that positive. So any pullback move if you get, I think you should look to exit from this.
Okay, exit on any pullback. But another query then, this one's coming in from Rupak Mehta, and he wants your thoughts on a dream folk. He wants to know if it's a good time to enter for a 1 year investment time horizon. Looking at the charts of a dream folk, it's kind of trading higher by 1% or so. Last 5 sessions saw a 3% cut. But in the last 1 month, we've seen a over 20% cut, in tandem with some of these mid-cap stocks that have gotten hammered. I think this is one of them, Dream Folks. Post the correction, would you look at, accumulating or buying this stock?
Well, not really, because this was an underperformer even when the markets were going up. The stock made a high of above 800 levels in August 2023. And post that, we have seen a significant run up in the broader markets, but still there has been no participation from the stock. Also, if we look at the volumes, and any kind of small pullback moves which comes in between, that is not supported by any kind of volume based buying. So just because the stock has fallen significantly, that should not be a reason to buy. The price volume action is definitely still bearish. So I would advise to avoid any kind of bottom fishing here.
Okay, avoid bottom fishing in a dream folk. I hope that answers your query. The next query I want to take up from Satya CK on Manappuram Finance. Wants to know the short to medium term target and at what level it should be bought. Now, this stock has seen good traction in the last, I think in the last 5 sessions. In fact, the stock has also been in F&O ban for quite some time. What levels would you advise for buying this stock?
So there has been bit volatility in last few days, but overall texture seems positive for the stock, because any corrections that are coming in at lower levels, we can clearly see a good buying interest in the stock. 170, 180 is the support zone for the stock, where twice or thrice recently some buying has been seen. So till it is about trading about 170, one can expect a slow and gradual up move towards 220 kind of range.
Okay, that's the view. Hope that answers your query, Satya. Let's move on to the next query then. This one's coming in on a Dwarkesh Sugar. Sukruta Bhide wants to know your thoughts. Bought at 75 rupees and he wants your thoughts for the next 1 year. Dwarkesh Sugar. Within the sugar pack, how is this stock looking on the charts?
This is one sector which is more of cyclical in nature, and generally we do not see leadership coming in the bull markets from from the sugar space. So I think and as of now, the broader markets have also been witnessing a good corrective phase. So overall trend does not seems to be positive in Dwarikesh sugar. So any definitely the buying price is high, so one can wait for some pullback moves to so that the losses reduce. But I would advise not to do any kind of averaging over here. Just hold the existing positions for some pullback move, and whenever we see any pullback moves, look to exit at higher levels.
Hmm. Okay, that's the view on Dwarikesh sugar. Hope that answers your query. The next query is coming in from Debu K. Wants to know if it's the right time to invest in AB Capital and Vedanta. Uh, would you advise any of these, looking at any of these stocks? Because AB Capital is just coming off its 52-week lows as well, around that 153 mark now. Uh, do you expect to see more sell off? Because in the last 1 month, it has lost 7%, but last 5 sessions, it has been fairly, range bound, sideways kind of a move. So, do you expect the stock to stage a comeback now? Is it in the oversold zone already?
It might take some time, but yes, if you're looking for a bit mid to long term perspective, then one can start fresh by initiating buying over here. I won't say to buy 100% of what quantity you want to buy, but at least 30% of that quantity could be bought at current levels, and look to add more positions if we get further dips towards 135, 140 range, which is a long term support zone for the stock. So overall, yes, the stock has corrected recently along with the broader markets, but in this correction, yes, around 30% of fresh buying quantity can be done at current levels.
Hmm. Okay, that's the view on Aditya Birla Capital. What about Vedanta, Ruchit? Would you look at Vedanta within the metal pack?
So I think within the metal space, we are more positive on JSW Steel because the kind of relative outperformance the stock is showing, when the overall metal space has been in a corrective phase, I think that's quite tremendous. So in such case, the downside becomes very limited in such case, and whenever the cycle turns for the metals, then a good outperformance can be expected from JSW Steel. Vedanta also has been in news because of the demerger story, so maybe price-wise downside could be limited here too. But if one is looking from a bit mid to long
Hmm.
term perspective, then we would prefer going long on JSW Steel from current levels.
Okay, preferred pick from the middle space is a JSW Steel. Hope that answers your query. Let's talk about the next query then, Airtel. Naveen has written in, wants to know your thoughts. Now, this is one stock that has managed to keep its head above the water in the recent sell-off. Last 1 month, it has given a positive return. When the index has seen deep cuts. 1600, does it warrant a look now, or or would you wait for some bit of a dip before buying in?
Certainly a good outperformer. The stock has we have seen in the stock over in this recent corrective phase. But off late we have seen some kind of profit booking happening in the stock, and the momentum readings are cooling off from the overbought zone on the weekly charts. And I think immediate support for the stock would come somewhere around 1540, 1550 range. So I would advise to keep a buy and dip strategy for this one. Any dips towards 1540, 1550, one can look at those levels for fresh entry.
Okay, that's the view on a Bharti Airtel. The next query I could spot was on a VA Tech Wabag coming in from Geetu Sandesh. Your thoughts on this particular stock, because today it's up somewhere around 2%, but it's still 500 odd rupees away from its 52-week highs. 14% out, gains coming in the last 1 month has been a rank outperformer, I would say. Uh, is it poised to retest or make a dash at 1600-1700 levels anytime soon, given the fact that it has been an outperformer, or would you say the recent uptrend is kind of running its course?
So I think any existing long positions, if there are, then I would advise to continue to hold on because in the recent
Hmm.
correction, we have not seen any significant volume-based selling in the stock. Of course, the markets have corrected, so most of the mid-cap, small caps have also seen a price-wise corrective phase. But the stock is hovering around its 200 EMA support, and in absence of volume-based selling, I think in case of whenever the market shows any kind of pullback move, or the mid-cap and the small cap shows pullback move, we should see a good participation on the positive side from BATech Weber. So one can continue to hold existing portions, Fresh buying should be done on a breakout above 1550. That's ideally the last swing high which was made in the stock, and 1250, 1240 is the support range which is coming.
Okay, that's the view on V8 Tech. Waba, hope that answers your query. Last query then, taking it on a credit access from Alex. Wants to know how strong is credit access at current levels. Today, of course, it's pretty strong, up 6% up as we speak, above that 900 level now. Is this the start of a fresh breakout on the charts? How strong is it looking now?
Too soon to see it as a breakout, because we did see some good pullback move in the end of December and January. But in that pullback move, you can see that exactly the 200 DEMA for the stock acted as a hurdle, and the stock was not able to surpass that. And the trend before that has been negative for the stock. So it's witnessing selling pressure at higher levels, need to surpass 1100 mark for any kind of trended up move to set in. Otherwise, I think no, majorly the larger part of the price wise corrective phase may have been done with, and we could see some time wise correction no, happening in the stock, with 750 to 1100 being a broader range where some consolidation can be seen.
On a credit access, too soon to actually say whether it's a breakout move on the stock or not. But with that, Ruchit, we've come to the end of the query segment. Would like to thank you for taking the time out and joining in, and of course helping our viewers navigate their stock related queries, and sharing your views on all these stocks as well. Look forward to connecting sometime soon again.
Thank you.
Thanks a lot. Quickly take a look at the market before we move on to our next guest then. Nifty in the red, mid cap index for almost 0.5% lower. So any uptick that we saw at the start of the day, it has fizzled out for now. Very quiet for the market, and advanced decline ratio has also tilted in favor of losers now. But on that note, let me bring on board our second guest for today. Joining me is Geojit. Is Gaurang Shah of Geojit Financial. Gaurang, it's been a long time, which is why I think I'm stuttering on your name. It's been a long time since we spoke last. What do you make of the correction that we've seen? Do you think we are somewhere close to a bottom now? Because some of the global brokerages, if you see, have turned bullish on India, and they say that the recovery may be just around the corner. Would you concur with that?
Well, I hope that their crystal ball grazing is absolutely true. And it does turn out to be so. Nandita, thank you so much. It's been quite long since we interacted on market opening. Thank you very much for having me on this platform, and morning to all of you all. So the sense is that this has been one of the worst times in terms of Indian market performance. We've been down and out since the time we saw an all-time new lifetime high on the index, Sensex and Nifty last year sometime. And from then onwards, we've been downward move from October till date. Thanks to the good friends like FIs selling left, right and center, record high numbers in terms of the sell side activity for FI. And add to it the Trump tariff tantrums. That has actually been one of the greatest reasons why we've been reacting the way we have been reacting, Nandita. But, this may last for some time, maybe till April, first, second week, till the time we have absolute clarity. At least that's what President Trump has said, that for 2nd April is the date, I believe, where he said you'll have a lot of clarity. Right. More tariffs is going to follow. Which country and on what goods and services, that only time will tell us. But somewhere close to the bottom, I honestly feel that, we may possibly have a couple of days of bounce back. Whether that bounce back is going to last and stay there, that's a big question mark. And the reason for that is the news flows. Look, there is nothing wrong as far as domestic issues are concerned, right? We had interest rate cuts. We had a decent enough Q3 earnings policy. Season, I beg your pardon. Outlook with rate cuts, 2 rate cuts anticipated possibly in the new financial year. Along with that, a steady GDP growth rate, policies, budget, everything, went quite well. So these are the imported problems, as I call it, which the Indian markets have to deal with. We'll have clarity sooner rather than later. And then we'll stabilize. The most important thing, Nandita, is stabilizing the market, which is not happening. India VIX, keeps on bouncing 5 to 6% every second day. And then, of course, you have concerns in terms of, a picture not being so clear. But my sense is that if you're a trader, you need to worry. But if you're an investor, these are the times when you can create strong portfolios.
Right. So, these are the times to create strong portfolios, which is my next question. Then, what do you do? Which are the pockets that you look to when it comes to building a portfolio now? Particularly for banks, the Nifty Bank has outperformed Nifty. Looking at the last 1 month, even 6 months basis. Private banks, of course, faring better than PSU banks, but given muted margins, higher slippages in the third quarter, and rising stress in the unsecured and microfinance portfolios, would you still be cautious on banks? Do you think the Goldilocks situation may be over when it comes to banks?
Well, maybe short to medium term possible, Nandita, but my sense is that one of the issues that I am not really over concerned, but slightly skeptical is the unfortunate ballooning of the MFI segment issue on the balance sheet. And this is not only on third quarter. This was visible in some of the banks even in the second quarter. Post second quarter earnings during the press conference, post third quarter earnings during the press conference. We have again somewhere close to about 6 to 8 names on which we are positive. So sectorially speaking, to answer your question, I think banks and financials, IT, auto, cement, defense, power, and cap goods engineering. These would be the preferred sectors, Nandita. And my request to all the viewers and investors would be that don't venture into the small cap and mid cap. Right now, large cap in terms of valuation looks very attractive. And I think once the market starts turning around, I think you will see the first signs of recovery in large cap, followed by mid, and then by select small caps.
Sure, but would you like to share some of those names that you alluded to in the private and PSU banking space, Gaurang?
Well, so I'll make things easier for your viewers and investors. So I'll pick two names. ICICI Bank from private sector and State Bank of India from public sector. Again, both are large banks. In IT, I would possibly go with TCS and Persistent Systems, large cap and mid cap. In power, I would prefer names like GSW in energy and Tata Power, keeping in mind the announcement made and the policy about power from nuclear power generation. And of course, clean and green power is a big theme that the government is working on, and so is these companies. In defense related, possibly Cochin Shipyard and BEL. These are the two names. Cement, large cap Ultratech, mid cap Dalmia Bharat. Autos, I'll pick one two-wheeler, one four-wheeler. Two-wheelers in form of TVS Motors, and four-wheeler in terms of a name which was in the news for all the wrong reasons, thanks to Tesla and the scare that the market had, Mahindra and Mahindra, M&M. I think at 27 plus, your downside is extremely protected from a long-term point of view, both M&M as well as TVS Motors. So I believe that would be a very strong model portfolio.
Sure. I mean, great to have all these names from you, Gaurang. But my question to you was, I was going to ask you about this whole Tesla situation as well. How big a risk it poses to the Indian OEMs? Because we remember the time when Harley and Triumph were looking to were making their debut in India. We saw Eicher stock sell off quite a bit, but in the end those competition fears were proved to be overstated, because Eicher itself hit fresh highs recently as well, right? So do you think a similar situation will play out for this whole Tesla's potential entry into India as well when it comes to Indian OEMs?
And I'm so glad that you asked me this question. So let me give you a brief, a detailed reply to this. The day Triumph and Harley decided to put a competitor in form of the JVs that they had against Royal Enfield, I was on one of your channels, CNBC Awaaz, and Mr. Anuj Singhal asked me this question. That very day, in fact, when the launch was supposed to be there, or the announcement came through, I very clearly remember, Nandita, Eicher Motors was at about 3,300 because of this news of competition coming. It corrected to 3,000. So Anuj asked me, what would you do? So at that point of time, and even in current situation, we have a positive coverage on Eicher Motors. And from 3,000 after the news, you know where Eicher Motors is right now. So that's the testimony and the conviction that we have. I'll give you one more example. You asked me about Tesla. I was reading a report. I don't know how far it is true or not, or how true or false it is, but the tag for Tesla model that is going to come into India, planned model, I would say planned model that is going to come into India, is somewhere in dollar terms, it is somewhere close to about $35,000 to $40,000, which translates into roughly about say about 30-35 lakhs or maybe a little bit more ex factory.
Yeah.
You put in insurance and all that, I think your price tag is going to that level model which Tesla is planning to bring into India. Indian companies have better models at a better price than what Tesla is going to bring in. So I think this, crying much before, I think it is our tendency to react the way we react, But I don't think that's going to be a major disruptor. Tesla coming in, that is. And time will tell you, look, Indian consumer, as far as vehicles are concerned, with a price tag of 25-30 lakhs plus, are very, very sensitive in terms of what they are buying and what is going to be the economical value addition of that particular product and how viable it is. Nobody is just going to jump onto Tesla because it is Elon Musk. I think they will test it and then possibly we see where Tesla lands and where our companies land.
Point taken, Gaurang. Just want to ask you a last question. Running out of time, I want to know your thoughts on trend. It has seen a fair bit of correction. Last year, it was the showstopper stock, so to say. Phenomenal growth. Stock prices also saw phenomenal growth, so to say. But third quarter numbers came out. Street was circumspect about the store optimization plan that they have. How much of a drain would that be? And will the stock continue to see pressure in the near term?
So, we like the sector. Let me say this. We have coverage on Shoppers stock, if I have to do a peer comparison. On trend, Nandita, I would say it was a showstopper kind of a stock. Phenomenal run-up in the last maybe about year and a half, or a little bit more than that. We had a lot of news flows about Tata Sons IPO. Then we know what happened. The stock rallied. Then it kind of realized that, okay, nothing is going to happen on that front. It came down and currently it is trading a little bit lower than what it used to be in some time back. Their store contribution is auguring extremely well in terms of future growth. Zudio has been contributing to a great extent. Standalone stores are doing quite well. And I have experienced this personally, Nandita, that, there was a time when a lot of people, instead of going into a store, footfalls went into e-commerce. After some years, this is my personal experience, the good part about offline is you can feel the product, you can see the product, you can compare the product. About online, you can't see it, you can see it, but you can't feel it. And many a times I have experienced that the product that is shown and the product that actually you get delivered, there is a lot of difference. And there is, dissatisfaction and bitter experience. So from earlier, it was from offline to online. Now it is going to be a Ghar Wapasi, reverse from online to offline. So I think this sector will do well in terms of growth.
All right, point taken, Gaurang. With that, would like to thank you for taking out time and joining in. I look forward to more frequent interactions here on. I'd love to get your thoughts on all these stocks and sectors, and thanks a lot for outlining a model portfolio for our viewers as well today.
You're always welcome, Nandita. Thanks. It was really great interacting with you. I wish you all the best.
Thank you. Thanks a lot. Well, the markets have been fairly volatile this morning. In fact, the mid-cap index has edged back into the green, a 0.3% kind of gain on the mid-cap index. So, good recovery from opening lows, and even the breadth has turned in favor of gainers, decisively, so to say. It's almost a 3:1 advance decline ratio on the NSE. 1700 stocks gaining to 661 declines. So yes, we are fairly volatile. Don't forget, we have the monthly expiry as well on Thursday. Ahead of that, there is a fair bit of volatility. In fact, the Nifty is back above that 22,600 mark as we speak. Let's hope this momentum continues and we manage to end the day with some green on the screen as we step into a holiday tomorrow. Of course, it's a truncated week. So let's see how things really pan out from here. But with that, completely timed out on this edition of Opening Bell. Thanks a lot for tuning in. Have a great day and come back and join us for Closing Bell as well at 3:30 p.m. See you.